Hello, we are in conversation with Mr. Nilesh, the MD of Kotak Mahindra Asset Management Company. Thank you, sir. It's a pleasure to have you with us.
My pleasure.
And congratulations on the completion of 25 years of the Kotak Mutual Fund.
Thank you.
So please let us know about the market outlook for 2024.
So essentially, when we talk about market outlook, people believe we'll give them levels of Nifty and which stock will do well. The experience has taught that we are not the right people to do that. We go more wrong than right. Our whole objective is to give you the data points and scenarios so that as events unfold in next year, you are in a better position to take advantage out of it.
Sure.
What we see globally, central bankers have done a great job in balancing between inflation and growth. They raised interest rates quickly to control inflation, but they didn't take out liquidity quickly to damage growth and convert that into recession. So we are now in a scenario where growth is fragile but positive, and inflation is lower, but inflation has come down, but it is higher than most central banks' tolerance limit. It creates a very good backdrop for 2024. We believe globally now central banks will have to cut rates. They may not take out liquidity like before, and fiscal, which was one big driver for growth, will come under pressure. It creates ideal situation for emerging markets which will be growing better, which will have more liquidity coming from developed market. And Indian economy is oasis in the desert. Everything seems to be going right for us.
Sure.
And it's a very, very interesting macro where markets are discounting a lot of positivity, but the positivity seems to be surprising us on the upside.
Right. Please talk to us about the investment themes which you highlighted in the...
So we believe today there are very few pockets where value is available in the market. It's growth at reasonable price or growth at any price. There's no point in going into growth at any price momentum. It will have probably initial pleasure and then lot of pain. Whereas growth at reasonable price may have initial pain in terms of underperformance, but eventually it will give a lot of gain. We are focused right now in banking and financial services, where we believe the underperformance and lower valuation sets good backdrop. We are also bullish. We are looking to add into IT sector if their recruitment turns positive and we see sales cycle conversion coming down. We are also bullish manufacturing theme on a China plus one basis. Companies which are serving domestic as well as global market, or companies which are becoming part of global supply chain. I think those companies will have multi-years growth ahead and they can still reward shareholders. What we are avoiding is low floating stock counter where valuations are out of whack. We are also avoiding small and very small companies and micro caps where we believe governance standards are not established. So essentially, it's like sitting in the car with a seatbelt tightened, but we are enjoying the ride.
Certainly. So India is transitioning, as you mentioned, from being a coach to being the engine now. So what is the India advantage?
There are three advantages to India today. One, talent is staying back. In the 50s to 90s, our best of the engineers, accountants, managers were going abroad. Today, they are running Fortune 500 companies in few cases. Today, their average income is double that of natives in whichever country they are operating. Now this talent is staying back in India. There are opportunities here. Prior to 2000, in order to start a business, you needed capital, which generally would have come from your parents, friends, and relatives. Today, private equity venture capital provides capital to deserving candidate. And most important is infrastructure. What was built before 2013 is almost getting replicated between 2014 to 24. Our ports, from being clogged, has become as efficient as Western world. Power from few hours of cuts is now 24/7 available. We have to ensure that it lasts going forward. Airports, railway, roads, the network is fantastic. Now, this Triveni Sangam of talent, capital, and infrastructure is something which, along with political stability, can create multi-decades growth.
Wonders. Yes. So, what is the key secret of wealth creation?
Discipline, discipline, discipline. Intelligence is not the key success factor. Many people, or education is not necessarily the key factor.
Sure.
Many people with no formal education has become more successful investor. So it is wisdom and knowledge and intelligence rather than education which is the key. What differentiates a successful investor versus unsuccessful investor? It is discipline. Discipline to manage your greed and fear. Discipline to manage between momentum versus long term. Discipline to stick to what you know best rather than copying from some other person. Those disciplines makes all the difference.
What is your message for the startups?
Well, you have the best of the opportunity available, and unlike in our generation where fear of failure was very, very high, today, thanks to them, fear of failure is accepted. And my feeling is that the startups have to take the charge and usher India into the next level of efficiency and productivity. The old brokerage house gave way to the online brokerage companies.
Sure.
The Dabba theatres gave way to the multiplexes. Sitting at home and eating is slowly giving way to dining out. There are so many ways in which life is changing, and any startup which is making life better should do well.
Certainly. Which are your 5 top picks for the 2024?
We can't talk stock specific, so I'll say buy Kotak Mutual Fund, Kotak Mutual Fund, Kotak Mutual Fund, Kotak Mutual Fund, Kotak Mutual Fund.
Super. More power to you. Thank you so much. Pleasure talking to you.
Pleasure
Thank
talking.
you.